let's take a look at shares of Walmart. That company just out with its quarterly numbers, and check this out. The stock is up by 5.5%. Adjusted earnings came in at $1.50 a share. That was 18 cents better than the street was expecting. Revenue also beating the street's estimates. And the retailer is announcing a new $20 billion share repurchase program. If you're looking at some of the numbers here, it looks like Sorry, I just lost the line in the sales. Okay, so international sales, $25.3 billion. Revenue was up by 9.8% in constant currency. And then if you're talking about the comp store sales, they were up by 8.2%. The company's CFO, John David Rainey, talking to me a little earlier this morning and just giving us some of the guidance of what they've happened here. Inventory is a huge question. Inventory levels, he said, are really getting to the point where they're under very good control. They feel good about what's happened there. In the first quarter, inventory levels were up in the mid 30% range. By the second quarter, it had come down to the mid 20% range. Now it's at 13%. And by the way, 70% of that is inflation. So they said from a unit perspective, things are going great. That's because of canceled orders, more markdowns to clear the inventory. It just said they're in a much better place on the inventory front. There was a Wall Street Journal story over the weekend that suggested Walmart was really putting the squeeze on its suppliers and trying to stop inflationary prices from getting passed on to them. I asked John David Rainey about that, and he said, we always work with our suppliers to make sure that we're being competitive around cost and price for our customers. That's really not anything I would say is new. It's more ongoing business for us. Now, as for what they're seeing with consumers, there have been some shift in the purchases and the purchasing habits. He said that there's less money to spend right now on general merchandise, so they've seen a lot more shift to food and consumables. And obviously, margins are hurt by that because general merchandise has higher margins. If you're talking about food and consumables, that's responsible for their gross margins dropping by about 80 basis points year over year. Said they are seeing people shopping around holiday sales when things like televisions, electronics, or air fryers go on sales. People are waiting for those sales and they're buying on them. But you are seeing customers trade down, too. A lot of cheaper proteins are being bought in the stores right now, things like beans, hot dogs, peanut butter, seeing much higher sales of those things. Although he did say that the market share that they've gained in the food business, 75% of it is coming from households that make over $100,000. And that may tell you that some people making over $100,000 are also feeling the pinch right now. Walmart says they're trying to do their best when it comes to things like Thanksgiving dinners, and they're making sure that the basket it takes to make your Thanksgiving dinner is not going to cost you any more than it did last year. They're talking about turkey, mashed potatoes, cranberries. I asked for the price point on that. He said it's somewhere between $70 and $80. Also asked what that meant. Is that the suppliers that are taking the hit or Walmart? And he said it's a little bit of both. That's stock right now up by about 6.5%.
Check out Home Depot now, if we can bring it up, because you figure Walmart says all this stuff. Maybe we have to rethink Home Depot, which is now up.
It's in positive territory.
And I don't know why I immediately thought, I bet you Home Depot recovers from. But it's weird. It was up 5, down 5, now up.
Two Dow components, too. You can now see the Dow up by about 181 points.
I mean, they're totally different. They're both big box, I guess. One's, it's similar.
It tells you a lot about the health of the U.S. consumer.
Exactly.